Welcome to Momentum Monday. It's Sunday, April 14th.
Tax day tomorrow, Ivan. What do you owe?
I already paid it on Friday, so.
Would you share? I'll share my tax return if you share yours.
No, thank you.
Wow.
I mean, I'm not running for president, so I don't need to do that.
I'd like to see all the side deals you got going on. Joe, Ivan's got more deals going on. This Bulgarian, I don't even know what you call him. He's a huckster. What? How's life in San Diego?
It's fantastic. I like it a lot.
All right. Guess where I was this weekend?
I think you said you were in South Carolina, right?
That's right. You ever been?
No, but I want to go sometime.
A lot of churches. It's the Bible Belt.
The Bible Belt. Oh, okay.
I could see you running one of those, just setting up church in South Carolina, doing technical analysis. The Church of Technical Analysis. All right, let's get right to it. I had a great weekend. All my clothes are disgustingly sweaty from riding. I got to go find a laundromat at midnight here in New York. But let's get right to the markets. Ivan, walk us through the markets and walk us through some good ideas. And I want to close talking about streaming and Disney today, but I want to walk through what you see.
Okay, so yeah, I have a few subjects that I want to cover. I mean, the S&P 500, it's back near all-time highs, only 1.3% below its all-time high level. Even financials are doing well. Earnings season opened for me officially on Friday with JP Morgan.
Yeah, where the stock, listen, I hate these. I don't know why people would waste their time owning these, but I prefer them doing okay than doing horribly. So,
I mean, yeah, they still have a substantial weight in the S&P 500 and Russell 2000, so it matters how the market reacts to their earnings. And so far, other than Wells Fargo, everything has been very positive, and there are a bunch of reports this coming week, and we know that usually in earnings seasons, financials report first, and then we have tech. So this week we have a bunch of banks, but we also have Netflix, which will be really interesting. But I guess you talk about it at the end. The market breadth is pretty good. There are quite a few sectors that are near all-time highs or just rising. And last week we briefly mentioned semiconductor sector. It added to its gain. And I think this is a all-time closing high.
Wow. Yeah, we talked about it last week. Pretty excited about this, but at the same time, I'm not a semiconductor person. I mean, I think it has to do with machines and biotech.
Machines, 5G, their Internet of Things. There are many catalysts, but the fact that semiconductors are outperforming is usually a positive for the market in general.
In the 90s, put it that way.
Yeah, I mean, it's looking quite constructively here.
Yeah.
And as I said, this is not financials and semiconductors are not the only sectors that are doing well. Interestingly, we saw the software stocks that a really scary day a couple weeks ago here on a high volume that most of them went down 4 or 5%. They quickly bounce back and they're near all-time highs.
Yeah.
And every single one of them just quickly recovered, which only comes to show that deep buyers are still in charge, and every little bit deep continues to get bought.
Yeah.
Which of course is just another indicator of a good risk appetite.
Yeah. Yeah, you could try and could think of a million reasons to be negative, but if buyers exist, the trend is your friend. I mean,
yeah, there are more positive reasons than negative. I mean, not all sectors are doing amazing. For example, healthcare has been having some issues lately.
Oh wow!
And, I mean, healthcare, it's it's a defensive sector. Let's take a quick look at staples to see if it's similar. No, so it's just individual for healthcare showing relative weakness. You see how quickly the relative strength line dropped.
Yeah.
So that's a very interesting development here. When we have,
I think what people should remember, if we go back to December, because I mean, everybody was like bullish on healthcare. And you could look back into December of last year and people can't get complacent and chase here. Setups are setups, but if you look back in December, these stocks were threatening to break out to all-time highs, just like we're talking about right now. Flash forward 4 months, and they're breaking down. So again, you can't get complacent. The price action is great in software and semiconductors, but you're right. Like there's some weakness out there.
I mean, as they say, the bull markets are markets of stocks, and they correct through sector rotation. So it's completely normal to see one or two sectors pulling back, while the general market indices like the S&P go sideways or even up, just because of sector rotation. So we should not turn extremely bearish. So bull markets are good for both bulls and bears. I mean, because there are opportunities on the short and on the long side if you're good stock pickers.
So let's go to some ideas.
Oh yeah. Before we go, I just wanted to touch on Tiger Woods won unexpectedly. What do you think?
Yep.
Here's Nike.
Listen,
breaking out on Friday.
I'm thrilled. I mean, what was noticeable today is just how many of the top players in the world right now, especially the ones that got TV time today, are using Nike. Spieth and Under Armour were hot 3 years ago, and it's been just straight downhill since then. The brand is Nike. They have the margins, they have fashion, as I say, fashology. And golf, while not a growing sport, is a very influential sport, especially in the era of Trump. I think Trump tweeted about Tiger Woods 4 times today. That's crazy. He's fascinated with golf, which is good for us because he can't focus on anything else and keep him on the golf course. But Nike just, appeals across all these stupid age groups, and appeals to kids and Trump and Tiger, and so it's a good day for Nike, great day for Tiger, it was a great day for golf, it was a great day for sports and for just excelling and winning. Okay, go to your ideas. Let's go to your, explain to people your list. Let's not walk through the whole list because there's people that pay for this. But let's walk through a few of the names that you see and any other idea.
Looking at next week's Momentum 50 list, which typically covers current market leaders. They're close to breakout points.
Yep.
And I think one theme that is interesting to me currently is still cybersecurity. I still see quite a few stocks that are setting up, for example, Palo Alto. Look at that big earnings breakout and then a sideways consolidation. I think above 250, this stock can have a quick
TNT broke out. I created a list for market on
10% move. Yeah, FKNT broke out. It's another one that is setting up.
Right. Is that I'll have to make a couple calls on that, but that's been basing for a nice while. Go back to a weekly. And all these stocks on a weekly, a month, they're just crazy. They've just gone up so much. That's a laggard. Oh no, that's not Proof Point.
That's a different one. Wait a second. Okay, here we go.
Yeah, that's an interesting. I'm going to make some calls on that. Again, I don't know cyber that well, but I have a lot of friends in the space. The one is the one that I've been. This is
the only laggard.
Yeah.
But cyber is doing well.
Check out my old favorite and one that I've been long, Checkpoint. Again, it's the it's kind of a long base. It's boring. It's very behind it's serving Fortune 500s, but very behind on cloud. But I just have a feeling that they have the hep. It's kind of like a Microsoft story in a way, in that they can tell a story. There's so much open field for them to gobble up companies. So there's one that I've been recommending for a while. It's nice to see it hit all-time highs. Earnings are Thursday, though, so don't chase this thing in front of earnings, especially after it's run and it's a slow grower. But this is one just purely technically I liked, and been doing work on it, and it's a nice win so far. And that's been the face of security software, I don't know, 15, 20 years in the public markets. So, money's flowing into this. Is what happens when money flows into a sector. Even the old dogs do well.
Growers, yeah.
And even indirectly, Cisco all-time highs, I think, in and around.
They're almost there.
Yeah, but no one from 2000s left except John Chambers. He's the only guy who still owns stock from then. Any other couple ideas, Ivan?
I mean, Lulu is still holding well.
God bless. Fashology is
this one. PS, it's a recent IPO that is setting up. It's looking interesting. There are actually quite a few IPOs, companies that are 6 to 24-month-olds that are setting up.
Yeah, still not making money. It's not interesting to me.
No.
But yeah, Lulu all-time highs, kind of basing here the high above the gap.
Yeah.
From earnings. You know how I feel about this. And I think we're and then we see, if we look at Shopify, I mean, the short sellers are all over this. This is the back end pure e-commerce play. Short sellers all over this because of valuation, because of Facebook, because of Amazon.
Interesting. The short interest continues to grow. Now it's 5.2 days, and it went up 15%.
The Citron guys have been wrong for about 150 points. They can bash this thing and trade this stock all they want, but they don't have the first clue about e-commerce and scale. And the point is, with the company like Shopify, the dips are getting bought because there's buyers behind the scene of the company on weakness. You still there, Ivan?
Yeah. I agree.
You got a chart of lift up. I don't know what that means.
Yeah, I just wanted to see what you think about.
Oh, now you're ahead of me talking about tickers.
Okay, let's go back to Shopify. What else?
Okay. Well, I think what's interesting, if we're going to talk to end it up here, a couple things. Let's take a look at GrubHub, how the markets work. How public and private markets are connected. So GrubHub had a great, short sellers were just pounded on this stock for 2 years because they felt that competition was coming, that GrubHub wasn't making any money, and they just got run over, right? Until the stock tripled to $140. All the short sellers were wiped out. And sure enough, this year we really do see how hedge funds work. And now the stock's breaking down, right around 60. And I mean, I don't know how the stock bottoms when, in the pipeline is Postmates, all these Uber, Lyft will probably get into food. I mean, so I think, the markets sometimes look easy to the longs and trend followers. When these trends end, and they end for many different reasons, and if you don't understand the catalyst for why these go up, these stocks can get ugly in a hurry. And so GrubHub is going to be a victim here in the future of just so much supply of platforms for takeout, both from the stores themselves, by Postmates. God, I'm having a senior moment on a couple of the other ones that I know. DoorDash. It's just endless. So be really careful. It's not just you can buy anything in this market. And then let's end with subscription. I think this was super interesting week, obviously, because I'm long Disney. Been tortured with this because I didn't want to miss the move. It felt like a very low risk way to play subscription, to to play on subscription service. You know, they have. It was a dangerous game. It's a dangerous game, and now we're going to see the market has voted. If we go to the daily here, I've got a 4-year takeout on the stock. So now we got the move, and a lot of people are going to say, "Oh, I don't want to chase it." It's the perfect scenario for a stock to go much higher. You know, you don't wait all this time, as people have done in Disney, to get the announcement and take a 10. Now, in the old days when I was learning how to invest, and I'm not saying this works all the time, that you would be so excited to get a 10% gain in something you've held for a year and feel smug about it that you would that you think that's it. And I think the way the stock closed, the way Netflix closed, if we take a look at Netflix, Ivan, it's down 4 or 5%. And it's kind of been acting like Disney. You know, in hindsight, it all makes sense. You know, Netflix peaked. If we look at a Netflix chart, longer term chart from like 2013, when it really took off. If you look at when Netflix really took off in 2013, and look where they cut that deal with Disney, and you go look at Disney from like 2014.
Yeah, actually, that was exactly the day when Netflix broke out, when they announced that deal with Disney.
But then you go look at Disney, because it was a good deal for Disney on the money side. Then you go look at Disney in 2014, 2015, and you can see it just like, you know, it got priced in that deal. Netflix got all the benefits. Not that Disney didn't.
Disney quadrupled, basically.
Yeah, Disney also?
I mean, Disney doubled since 2013. 50 to 120.
So they got the benefits of it, but I think the markets wanted Disney to do this based on the move. Like, it was the most telegraphed announcement of all time if we go to Disney's chart. And yet it seems like when they finally announced it, and I wasn't expecting, I didn't know what day they were going to announce it, and maybe that was the surprise, but you would think that it wouldn't be news when they and by the way, they announced shipping in November. So, you know, the stock's up 10% on an announcement. So I think there's just a lot more to come. You can't read too much into it yet. Obviously, it's a game changer. Listen, there's not a family in the world that's not going to have a Disney subscription. I guess it all comes down to the economy, you know, for the rest of the Disney business, and will the market eventually say, like PayPal and eBay, at some point in the future, the same people that are excited about Disney, including me, that it was up 10%, are going to be complaining in 3 years when Disney has, I don't know, 60 to 100 million subscribers, and, you know, the theme parks are holding back Disney's stock because, you know, they should be a subscription business. So you know, one can of worms leads to another can of worms. I'm going to enjoy this. You know, I personally mentioned on Friday that I bought a little more stock on the Gap. You know, it's quite evident, you know, where you got to stop out of this if the market changes your mind about this deal. But I think, like Google buying YouTube, if Disney gets this right, they've really helped the long. I mean, it's really just a big move. You know, could they have done it a couple years sooner? Sure, but, you know, and will they execute it? Nobody knows. And if they don't, the stock will be right back down in the low hundreds. So that's interesting. And then, so GrubHub and Disney were interesting. Checkpoint's earnings are Thursday. Netflix earnings are this week, Ivan?
Yeah, absolutely, this week. I'm not sure when exactly. Let's see.
Okay.
Tuesday.
And you know, and in terms of the S&P, let's end it with there. You know, it's pretty exciting to see the S&P at all-time highs. I can't explain any of this stuff. I mean, other than, you know, with cash, you know, the thing that drives me nuts is cash is earning 2.5%, Ivan, and the markets are, you know, we were living with 0% interest rates for so long, and now we have true 2.5% is real money for no risk.
For rich people, yeah, absolutely.
So, you know, in the back of my head, I'm like, oh, this is like a sucker's market. And so I got, as usual, it's the Canadian me, and maybe because I'm old, you know, I got half a foot to a foot out the door, because that 2.5% cash any kind of turbulent market is going to be rushed into. So I think we're on the verge of seeing some volatility again. But at the same time, I'm sticking with the stocks that got me there. Payments, if we look at PayPal, and continues to hit all-time highs. It's overvalued. This trend will end. I just can't predict when. Visa, all-time high. MasterCard, all-time highs. Shopify. So the payment, fasciology, security, semiconductors, the software, the stuff we've been talking about for months.
Yeah, even energy. I mean, on Friday we had a big acquisition which steered up the whole sector. So
it's more about bankers, getting paid. These things are just conglomerate, trying to cut costs. Maybe that's the right thing for them to do. All these energy companies, just like the financial companies, to roll themselves up. But most of it is window dressing at this point. It's just going to be endless rounds of cuts. There's some truth to this Tesla stuff about, old fuel systems. Whether Tesla makes it or not is one thing, but the electric cars are here to stay. And, there's just a big shift. I don't get the catalyst, so I'll stick with software. All right, buddy, have a great week.
You too, Howard. Have a lot of pizza in New York. Okay.